Is it on? Hello? Marvellous. Good morning. Thank you for joining ConservativeHome this ungodly hour, 9:15, 9:30. I'm always surprised. I'm always very impressed by the people who come to the early morning sessions. I never did it before I was a professional. So thank you for joining us here with the TheCityUK to discuss the role of the financial services industry in Britain's recovery. Now, the financial services sector is one of the biggest and most important parts of the British economy. It has been for decades. It generates an awful lot of the revenue that the government uses to, previous governments and this government will use to drive their spending plans. But that role has sometimes been criticised by people who suggest that the UK has ended up over-reliant on the city and that maybe that model doesn't work. So what we're here to discuss today is not only how can the city and the financial services sector help to drive the economy, but also how they distribute the benefits of that economic recovery around the United Kingdom. I'm Henry Hill, the news editor of ConservativeHome. Joining me today is John Glenn, Economic Secretary to the Treasury and City Minister, Miles Celic, CEO of the TheCityUK, Dr Kay Swinburne, Vice Chair of Financial Services at KPMG, and Dr Gerard Lyons, who is a Senior Fellow at the IEA. The format's very standard, I'm sure you all know. Each of our speakers will speak for about 5 minutes and then we'll throw the floor open to you for questions. So without any further ado, over to our first speaker. Hello, John.
Thank you very much. And it's a great pleasure to be here. And what I thought I'd do is set the scene, if you like, in terms of where we are as a government in our approach to financial services and set out some of the specific things that we need to take forward over the coming months in order to deliver the enablement of the full realisation of financial services potential. As has been said, financial services is a crucial part of our economy. It employs 2.3 million people, and 2/3 of those jobs are outside of London and the South East. And in the context of levelling up, that is ensuring that economic opportunities flow across all regions of the United Kingdom, it's really important that we have that in mind when we take those interventions and work with regulators to enable the growth of the sector. I think the first sort of starting point for me to reference is the Chancellor's Mansion House speech on the 1st of July, where he set out 4 thematic drivers for financial and professional services. The first of those is about being open. We've left the institutional frameworks of the EU. It gives us an opportunity to do things slightly differently. But we've got to do it in the mindset of saying that actually we won't compete in financial services by having lower standards. We must have high global standards. Our regulators are well respected globally. That doesn't mean to say they're perfect, as no government will ever get everything absolutely right. But what we have got to do is be open to new relationships, new ways of doing business across the globe. So we have economic and financial dialogues with countries like Brazil, with India, with China, with Hong Kong, with Singapore. But we've also opened up new dialogues with Switzerland, where we have an MRA that is evolving, where we have similar attitudes to how financial services should operate, and we want to deepen those relationships. The second theme is embracing the opportunities of green finance. And just 2 weeks ago, the government and the Debt Management Office issued the largest ever sovereign green bond issuance of £10 billion. This was 10 times oversubscribed, and I think demonstrates the maturity that now exists in terms of the appetite for green finance. We published a green financing framework, and as we move towards COP26, which we obviously co-chair, keeping that high level of ambition on disclosures and on the way that the financial services sector will enable the investment into us achieving that net zero by 2050 that we've legislated for. The third element I want to briefly touch on is the application of technology to financial services. Everyone must recognise that over the last 10 to 20 years, financial services has been transformed by disruptors coming in, fintechs, of which we're a global leader, and that's been a very resilient part of our financial services sector. But we also have got some challenges of how we calibrate the regulation of cryptocurrencies. Do we go for a central bank digital currency? How would that work? What does it mean for intermediary banks? And so the embracing of technology and the opportunities it gives on the financial inclusion agenda is also something that we're very focused on. And then the fourth theme, which I think goes above everything, is about competitiveness. if financial services is going to grow, we've got to have a mindset which says, well, how does the regulator, both maintaining those high standards, but also enable the optimization of competitive advantage for the UK? And to that end, we've got a whole range of pieces of work going on. We're looking at the wholesale markets review. We're looking at reform of Solvency II. We're looking at things like access to cash. We're looking at the listings review. We're looking at the Ron Khalifa review into fintech and a number of streams of work that came out of that, which I suspect Kay might mention in a moment. We're also looking at tax, the surcharge and the levy. It's very important that we get that right in the context of the decision that Chancellor made on corporation tax, so that the whole of the sector can face the future with confidence. And then the final thing I would say is that we've got to keep close to industry. And by that I mean listen carefully to what they're saying about what they need to continue to prosper. Previously, lots of directives were cooked up in the EU. We had significant input into that, and that was the way things worked. What we've now got to do with the future regulatory framework, and that's legislation that I hope will come before Parliament in the second quarter of next year, is reset that relationship between the Treasury, Parliament and our regulators. And the mindset needs to be one of enabling competition, but also looking to the whole competitiveness agenda, but in the context of doing the excellent job that the PRA and the FCA have done since the crisis 12, 13 years ago, of actually having high standards, because it's on those high standards that our reputation globally will be based. Thank you.
Thank you very much. Straight over to you, Miles.
Thanks very much, Henry. Thanks very much, everyone, for attending today. My name is Miles Celic. I'm the Chief Exec of City UK, which is the representative body for financial and related professional services. And before I go on, I should just thank John and his colleagues at the Treasury for the fantastic work that they've been doing over the last few years. We've had Brexit, we've had the pandemic. This hasn't been an easy gig for you, John, but thank you very much for everything that you've achieved in that time. I'd just like to build on some of the things that John said. So he made the point, a very important point, that this is not just a London-based industry. This is a massive national success story. It is 10% of UK GDP. It's 11% of UK taxes, something we always make a point of raising when we have a Treasury Minister on a panel.
You want to pay more?
We can have a conversation about this as the event goes on. And it's also the UK's most successful exporter. In fact, it's the most successful exporter of its kind anywhere in the world, and it's worth bearing in mind that half of those exports again come from outside the M25. And to give a sense of what that means, if you look at this constituency, Manchester Central, 43,000 jobs in this constituency are in financial and related professional services. There are a further 78,000 jobs in Greater Manchester in financial and related professional services. It is a generator of economic activity, an enabler of economic activity elsewhere in the economy, and a driver of high-value jobs that any city would welcome having. So it's a really, really important dynamic. But beyond the big numbers, it is also an industry that makes things happen in everyday lives. When you buy your home, when you insure its contents, when you save for your retirement, when you send your kids to university or wherever, it's this industry that helps to make that possible. And I think it's important that we keep sight of the human dimension in this whenever we throw around the big numbers of the billions and the trillions. In terms of what this event is about and how we, to coin a phrase, build back better, what is it that the industry can contribute to that? So we were very proud to be able, as an industry, to step up and support the government's efforts during the pandemic. A huge amount of money was put into businesses and into households during that period. But it's about how we build from that. So every pandemic, pretty much every pandemic in history, has acted as an accelerator of pre-existing political, economic, social, technological, environmental trends. And we've seen that again with this pandemic. And the industry, our industry, is ready, stands ready to support the recovery after the pandemic as we grow and we adapt to what will be substantial economic changes here in the UK and indeed internationally. And we're very supportive of the Levelling Up Agenda that the government has adopted. In fact, one of our recommendations in the report that we had around how we rebuild after the pandemic was to appoint a Levelling Up Minister at Cabinet level. So we're delighted to see Michael Gove with that brief. But there's more that can be done. We can devolve, as the UK, we can devolve powers into metropolitan areas and elsewhere, create laboratories for policy experimentation, share best practice. It would be great to see a better representation of the regulators and the supervisors in the regions. At the moment, the only office outside London for the Financial Conduct Authority is in Scotland, and large big ticket decisions still need to be made in London. If we look at the areas that will really drive growth in the future, and John's touched on some of those, such as fintech, such as green, surely it makes sense that for the early days of those companies' existence, that there is a local office that they can deal with, that they can engage with in the FCA. That means you don't have to engage with the far bigger bureaucracy that exists with the FCA in London. Important that we build on skills. Digital and green are going to be a huge driver of that, and we've been very pleased to work with the City of London Corporation and others in the setting up of the Financial Services Skills Council after the task force that the Treasury set up, which will drive a lot of that. Surely there is something wrong when you look at STEM graduates in the UK, and the highest proportion of STEM graduates who are unemployed 6 months after leaving university are computer science graduates, at the same time that there is a computer science graduate shortage in the UK. So we need to look at what more we can do for industry and government to work together on that. And on regulation, completely agree with John. This is not about a race to the bottom. It is about maintaining high standards in the UK. That's what attracts people to list in the UK. But also it is about making sure that the regulators in the UK are responsive and they are fast and they are nimble. And surely that has to be one of the Brexit dividends that the UK has to reach for. And then finally, on the international dimension, as I said, we are the UK's most successful exporter. We're the most successful exporter of its kind anywhere in the world. We are a contributor to UK soft power. And we recently launched an international strategy, and I'd like to thank the various financial services trade associations and the City of London Corporation who contributed to that. And this is about how we make sure that the UK remains a world-leading international financial centre, because it is a highly competitive environment out there, not just in the EU, but more broadly. There are other centres that are breathing down the UK's neck on this who would love to take business from the UK. This is not just about keeping business here. We've got to be ambitious, we've got to be bold, we've got to build and actually seek to bring business to the UK, not just keep it here. But thanks very much, and looking forward to the discussion.
Wonderful, thank you very much. Over to you, Kay. Try and
Thank
pivot
you.
without falling off my stool. There we go.
These stools are a challenge, by the way. It's like being sitting on a wobble board. They're constantly moving underneath you. So if any of us do topple off, you'll know it's not last night's effect
They
of
will be on
various
YouTube,
events.
so.
I will. This is my first event as speaking at a conference for the Conservative Party without being an elected member. So it's a real pleasure for me to actually be sitting here talking about the industry's view on the way in which the financial services sector can actually facilitate the growth of the UK. And for me, it's been a pleasure the last 2.5 years going back into the private sector and working at KPMG, and indeed I now chair the International Regulatory and Strategy Group for the city, where we actually help sort out some of the issues and priorities for the sector and try to identify some of the areas where we can facilitate growth and areas where barriers to that facilitation of growth and capital flowing can actually be identified and removed, and we're working with government. And indeed, I'd like to thank John for all his efforts. He has been a huge ambassador for the sector and makes a real difference, and we were very, very pleased that he stayed on in the recent reshuffle in order to carry on that work and to really facilitate things. But whether it's levelling up or whether it's the green agenda, they all require capital. It's that transfer of capital, and therefore you need a thriving global financial centre at your disposal to actually get that capital to work. And there are various things that we can do to make sure that that actual flow of capital improves. And for me, I would say this, I was involved in the regulatory agenda in Brussels for over a decade with regards to getting that tsunami of regulation through post the financial crisis. But the time now is to actually really look carefully at what we have, what's suitable for the UK as a global financial centre, and start to unpick some of the things that might have been holding the growth of the economy back. And one of those big things, I would say, and there's a few people in the room that will understand, Solvency II is one of those pieces of regulation that John referred to that actually puts restrictions on some of the long-term capital being put to use for things like the green investments that we need going forwards, for the levelling up agenda. We need to make sure that we actually match long-term liabilities and in a prudential way with those opportunities to invest. But the reality is there's billions of cash sitting at the moment which could be released for that function. And we need to make sure we do it in the right way, in a careful way, but there is a huge amount that we can do to make that much more efficient. And I'd really like to see that actually happen quite quickly. We keep talking about the ability to be agile, to be quicker outside of the EU than we were inside. So we need to find a way to actually facilitate that with speed. The Fintech Agenda is a huge, I had the privilege of chairing the Policy and Regulation chapter for Ron Khalifa over the last year or so. And the recommendations within that were extensive. There were some 26 recommendations on policy and regulation. And I'm actually really pleased to say not only has government listened, but the regulators, as independent regulators, are also listening and have actually now got people on the ground facilitating those changes that were suggested. The sandbox, where people actually can take a new idea to the regulator and test it in market conditions, is going to be expanded. There's going to be a new digital sandbox. They expand the use of those things. The regulator was world-class in terms of leading some of this innovation. They're going to take it forwards and really take it to the next level. So I really am encouraged by what we're seeing both from government and indeed from the regulators. But we need to get that future regulatory framework right. And we need to not spend too much time worrying about how we get this right. It needs to be able to evolve. And I know that's not the way our regulation works either. We need to actually get at least the framework. I hope that's not symbolic of how government works. Yeah. We will actually hopefully get this right so that we actually allow independent regulators to work within that framework, but put proper scrutiny around it. And certainly parliamentarians need to have a say, but actually we need to make sure that the regulators, although independent, are working to the same agenda, that they really do have an eye to competitiveness as well as to stability, because otherwise we will be held back and all those opportunities will be diminished. So I am actually really encouraged by what I've seen in the last 2 years in the private sector. The financial services and professional services industry are leaning in. They are there to actually help facilitate all of the changes and the growth agenda that are needed right now. And whether it is the levelling up, whether it's the green agenda, whether it's funding transition, it's all well and good talking about green bonds, but ultimately funding transition is a really important element. It's going to involve hundreds of billions of pounds. What better place to raise that fund for all of those global corporates than here in the UK. So I'm actually really encouraged by the way that industry is working very closely with government and indeed with the regulators to make sure that we have a global financial market for the future, not just for now, but for that green agenda going forwards and for the digital agenda of the future, whether it be fintech or the much broader market, which is going to be digitised. So I'm really hopeful that we're getting it right. We've got a lot of work to do, but we can work in partnership with government and the regulators as a sector to make the difference.
Thank you very much. Last but not least, Gerard.
Well, good morning. It's a great pleasure and great honour to be here this morning. 3 areas I would like to focus on. First, a healthy economy and the vital role that the city and financial services can play. Second, a prosperous city. London is currently the second most competitive financial centre globally. How do we stay ahead of the game? And third, financial stability. Given where we are, and this is very relevant for where we are, that noise in the background, where we are in the economic cycle, financial stability is a key role we can't lose sight of. But first, the healthy economy is already being mentioned by Miles and by the Minister, the key role that the city plays, both directly in terms of jobs and indirectly across the economy. But if levelling up, which is a very clunky term, is to be a true success, then the city not only needs to keep doing what it's currently doing, but actually needs to step up and do even more. Let's take the funding gap. The funding gap, embarrassing to say, was first identified 90 years ago. 90 years ago. In 2019, the funding gap, and this is the funding that small firms need and that the financial sector does not provide. In 2019, the Bank of England said that that funding gap was a mammoth £22 billion. Now, the government has done phenomenally well in this crisis, nursing us through, but unfortunately, many small firms will emerge from this crisis with bounce-back loans. Obviously, it was necessary. But the whole issue in terms of the funding gap for small, medium-sized firms needs to be addressed. And banks do need to step up more to the plate. In turn, maybe the capital tax on banks needs to be reduced, but something needs to be done to improve further. Small firms is one area. Young people is another area. I'm a senior fellow at Policy Exchange. I did a big report on the financial sector in the summer. You can download it. But earlier this year, I talked about the problem in the housing market. Obviously, everyone is aware of the need to build more houses, but the financing, particularly for younger people, is an area in terms of blended mortgage products where there's a lot of innovation being done, and that's another area of excitement in the next 1 or 2 years. Financial literacy, lots more that can be done there. But finally, on this point, the city's infrastructure is world class. But across Europe now, Frankfurt, Paris, other centres are investing heavily in data and back office facilities. The same is happening across Asia. The UK needs to remain at the forefront in terms of its financial infrastructure, but onshore more of the back office facilities that often used to leave these shores to go elsewhere. That could reinforce that regional connectivity between London and the rest of the UK. So first, healthy economy. City does a lot. We can probably do a little bit more and will do more, I would expect, in coming years. Second, a prosperous financial centre. London, in last week or the week before, the half-yearly survey of global financial centres was released. London was still second. First in Europe by a long way, although Paris is up to 10. We cannot be complacent. That success reflects many things that will remain in place. But the US is very much on the front foot, including on the regulation side. Asian financial centres are on the front foot because the global balance of economic power is shifting to the Indo-Pacific, India in the west to America in the east. And it's not contentious to say that 1 or 2 firms in the city are encountering a regulator on the continent, or regulators on the continent, who have a very strong political bias. We need to be a bit more on the front foot. Now, for a financial centre to thrive, it needs 3 things coming together. Inherent characteristics, and London has inherent characteristics that, as I pointed out in the referendum campaign, made the idea that people would exodus the city a nonsense idea. We've got the rule of law, language, time zone, the vibe of London. Let's hope that returns post-pandemic. But on top of that, for a financial centre to thrive, it needs to be the place that customers want to do business, and it needs to have the correct regulatory environment. Now, clients will do business if markets are deep, broad, and liquid. In the 60s, for instance, London became the offshore centre for the euro-dollar market. In those days, euro meant international. It thrived because the US was on the back foot. We're an offshore centre for Europe now. We can become the offshore centre for the euro market, the euro market. But the point is that we need to have deep and liquid markets by remaining competitive, so clients still will want to do business here in the UK. The regulatory environment, Kay has mentioned, and I would endorse that. In fact, the Minister talked about our global reach. We ran the Financial Stability Board in some respects for a few years. 2 of the 4 global standard setting bodies the UK currently chairs. So we can actually both be at the forefront of modernising regulation and at the same time, as Kay touched on, making it almost fit for purpose, modernising and also making it not only regulatory tight, but positive for the economy and for competitiveness. Third and final area is financial stability. If you go around this conference, or indeed judging from last night, you would think that the UK was the only country that faced a budget deficit challenge. Global public debt levels are at an all-time high. Let's not forget that. We have had a pandemic, but there was lots of issues pre-pandemic. But at the same time, monetary and financial stability is a key area that we should be more concerned about, I would argue, than we currently are. Currently, we not only have almost unlimited fiscal policy globally, we currently have unlimited and unconventional monetary policy, both in the UK and globally. What does that mean? Zero or close to zero interest rates means that markets are not pricing for risk. Quantitative easing means that the biggest buyer in the government debt market globally is the central bank. Central banks are not commercial buyers. So we have short-term rates not pricing for risk, long-term yields not reflecting true demand and supply. Exit strategies from monetary policy need to be maybe imminent, but also gradual and sensible, and need to have these issues in mind in terms of monetary and financial stability. And it's an important thing in terms of achieving economic growth in the UK, and we can talk about that in the Q&A. But just to finish off in terms of financial stability, it's not only what happens in terms of the city, it's also, and this was touched on by the Minister in his comments in passing, it's about financial scrutiny as well. Obviously, we don't need the rule book to be checked every moment by a parliamentarian, but we do need to ensure that that oversight and the right regulatory perimeter between Whitehall, Westminster and the city is there. So 3 areas: healthy economy. City is already doing a lot, I believe, and expect it to do more, and it should. Second, we need to ensure the city remains at the forefront globally, competitively, and that includes the regulatory environment and the place where clients want to do business. And third and finally, financial stability as well. Thank you.
Thank you. Right, so now we're going over to you. The usual rules apply. Please stand up, give your name and where you're from. I'll ask a question, not a statement or a speech, please, and not a question requiring speech. If our panel can't make sense of your question without context, you're either asking the wrong question or the wrong panel. Please raise your hands and we'll get going. So we'll start with the gentleman in the second row here, and I think there's a microphone on its way to you. There you go. Thank you very much.
Okay, I'm Alok Mitra from the Watford constituency. I agree entirely with what Dr Gerard Lyons was saying. I think the 3 most important things are the financial stability, regulation, and also education. So there are 3, the questions I want to ask is around those things. First and foremost, I can remember as a child, the point is that the banks have gone bust every 10 years since the 1960s, and I can tell you exactly what happened every single occasion. So what are we doing to actually make sure that we really have robust regulation to stop this happening? The second thing is in regards to financial education. I mean, I think it's very important for that to happen right the way through, and I don't think enough has been done about that. And in regards to the regulation, I think the regulators are worse than useless. I don't rely on them at all.
Is there a question?
Yeah, the question is how are we going to actually beef up the regulations so they work and they're actually on the side of the consumer and not the industry that they're regulating.
Okay, right. So do you want to just give the microphone? Yes.
Great. So thank you very much, Alok, and I'm very happy to take those questions. Look, what I would say is that lots happened since the financial crisis to ensure that banks and their levels of capital and the protections that are in place have been transformed. Indeed, well, you shake your head, but last year, when we had to get money out to the economy straight away, one of the reasons the banks couldn't lend immediately and we had to introduce bounce-back loans is because they were doing affordability checks. And we put them under quite a severe amount of regulation, which we then had to release by doing 100% backed loans, 47 billion, which got out pretty quickly. On your second point on financial education, it is in the curriculum. The issue is that with academies, the discretion over what goes in the curriculum is broader, so you don't have a universal prescription. But actually, as a constituency MP, and I think about the 9 secondary schools in my constituency, they have got different demographics and need different sorts of products. The financial services industry and many of the big banks do put a lot of investment into financial education, but I think that there's more that needs to be done there, and I think the coordination of that to get a prescription that is effective, money and pension service is doing a lot of work in that area, and there is more to be done to coordinate. In terms of your third point, your general critique of regulators, they have an excellent reputation globally, but they will need, and I think Gerald made the point very well, and Kay as well, they will need to be reset within a framework that actually prizes competitiveness as one of their goals. That will help significantly. We are one of the world's most sophisticated jurisdictions for financial services, and they need, as regulators, to be the most sophisticated in the way that they regulate. The FCA is going under a significant transformation program under its new CEO who's been there just 11 or 12 months. That will bring, I think, a significant change in how you will interact with the FCA, because they will be able to manage and evaluate risks across the 60,000 or so businesses that they regulate based on real data in real time. And so I do think there's a lot of work going on there to change that, but it's not all bad news at the moment.
So I think John's captured a lot of this incredibly well. I think one of the differences between where we are now and where we were 12 years ago, and I was in a bank during the financial crisis, I saw this firsthand, is that the banks and the rest of the financial service industry was able to support the economy during the pandemic rather than needing to be supported during the pandemic. So as John set out, I think it is a very different perspective, not just in the UK, by the way, but there's been an enormous effort internationally to change the nature of banking regulation. It feels and is very, very different. On the financial education point, as John says, Michael Gove, when he was Education Secretary, made that part of the national curriculum. There's more that can be done to make sure that is implemented in a more consistent way. And actually, it's something that industry can do more on. So I think particularly for kids, if you're able to bring these things to life, and there are huge amounts of work that are going on within the financial services industry in terms of support for charities in this area, let's look at how we can tie all of this together. But I am conscious that the national curriculum has sort of become sometimes a little bit of a grab bag. Let's just chuck something in the national curriculum. And I think we need to be really careful about how we're doing this and what we're seeking to achieve. And then just on the final point about the role of the regulators, look, we would be the first people to complain, and we are the first people to complain when we're not happy with the regulators. I think they do have a challenging brief. I do think we also, though, need to be really realistic. And there is a difference between having well-regulated institutions and regulators that are doing their jobs with basically telling people you will have no risk ever again. I don't think that is a healthy place for an economy to be. I think it's about making sure that we've got the right amounts of risk properly regulated, but we cannot remove risk from an economy completely, or frankly, you're no longer in a capitalist economy.
Okay, so we're going to open a new question. I should just say, I think I forgot to say at the beginning, if you're tuning in on YouTube, you can, apparently there is a mechanism in which you can send me questions, so please do. Feel free. We're going to start taking them in pairs. So the lady in the front row there, and then the gentleman in the front row over there. So if you could just speak, and then we'll... Thank you very much. Microphone. There we go.
Anne Fairweather from Hargreaves Lansdowne. It's great that the City UK are coming to our hometown of Bristol for your national conference. I've got a question. You were talking around competitiveness and reviewing financial regulations post-Brexit, and I'd be interested to hear where you think the benefits are potentially for consumers there. For ourselves, we're really interested in the advice guidance boundary, and obviously Kay knows MiFID inside out, so she's the expert on the subject. But we think there's a real opportunity there to be able to guide investment clients more so we could compete on better information and better outcomes for them. But I think in that review of financial regulation with consumers in mind, what do you think the potential benefits could be?
Lovely. And sir?
Tony Langham from Lansons. Two things. Didn't hear any mention of the offshore territories and crown dependencies, so I just wonder what role everyone thinks the great centres of Jersey, Bermuda, Cayman Islands that earn a lot of money for London have to play in the recovery. And then we didn't talk about culture and inclusivity. I'm conscious it's economic recovery. I don't want to judge the room, but we are discussing financial services in a room full of dark suits, as we always seem to be. So is there anything that we need to do more on that?
Okay, I think we'll start at this end of the panel and sort of work down. So, come on first.
Okay, well, thank you. The question from Anne. Look, in addition to being policy exchange. I've got 3 hats from the city. I'm on the board of Bank of China in the UK. I'm on the board of BGC, which is the biggest interdealer broker in London. And also relevant for this question, I'm a shareholder and strategist at Netwealth, which is a discretionary wealth manager. And we set ourselves up 5 years ago. And Anne asked the question from Hargreaves Lansdown, what does it mean for the consumers? What I found when we set up Netwealth was that the consumer market in terms of personal finance in the UK is ripe for disruption. Fees are incredibly high. Consumers are effectively charged too much for poor service. One needs to ensure that the barriers to entry allow new players in. And it's a case of ensuring, and MiFID ensures this, that there's complete transparency about the fees that people are charged. In the city, people spent so much money on MiFID and Solvency II, they don't want to discard them, but we need to change much of the regulatory architecture there and to keep the bits that are fit for purpose. But in terms of consumers, if you take, for instance, ISAs, of those people who have ISAs held for more than 5 years, more of those ISAs are held in zero interest paying cash than in equity or bond investment. That suggests that people want to invest, but they don't actually know what to do once they start to put their money to work. So it reinforces the whole message about financial literacy, but at the same time it's about openness, transparency, and ensuring that the fee structure as well as the quality of service is good. The energy market experience recently has put some people off the idea of being able to move around. I think you need to not have price caps, obviously, but you need to encourage mobility and make it easier for people to find the good quality consumer service. So on the consumer side, the city has a lot more that can and should be done. I'll leave the other areas to the other panelists. Thank you.
So MiFID II I do know an awful lot about, as Anna's just described, but the reality for me is that MiFID II's biggest mistake, as far as I was concerned, was to try and combine the wholesale market regulation with the consumer protection element, because 28 countries have got very different consumer protection regimes, and you try to actually make it fit everybody. So you've ended up with thousands of pages worth of regulation when actually they are very different circumstances. The wholesale markets review, by its very title, I hope means that the UK's first review of MiFID will concentrate on the wholesale markets, the professional markets, why London is a global financial centre in the first place, and will actually make those markets more efficient, will remove some of the barriers that were put in, which were actually only there to actually protect some of, for example, the Italian retail bond market holders. So you need to actually understand the markets are very different, and if we make that determination, consumer protection is in itself a really important element of UK regulation. But I think it stands apart from the wholesale markets protections, which are for professional investors, party to party, globally interfacing with one another. And I think that distinction would be a really helpful start, because then you can actually concentrate on the part of the market that you need to in order to put the protections in. But as was just rightly said, you cannot have complete protection. You know, the whole issue about funding your pension is that you need to put some money at risk in order to get the returns. And so we can't have the attitude that everybody has to be protected from everything. And so, you know, you do have to have that education and standing on it. I'm going to pick up on the diversity issue, because I think it's little known how much the city actually does on diversity. The stats are not good. The stats are actually pretty poor. But the reality is that everybody is trying to do something about it. And there are very few exceptions I've come across where that is the case. And whether it's gender, and I got told off in the European Parliament once for referring, you know, sort of to the gender issue as being part of the minority representation. It was pointed out to me by a very helpful German MEP that women make up the majority of Europe's population. Why are you referring to yourselves as minorities? So I have changed my language. We do need a 50%, not 30%. You know, there are some issues here. But I would like to see diversity as a whole. So diversity of thought, diversity of background. You know, my firm has just published social mobility data with regards to its senior management. That actually is not a legal requirement right now, but it's something we felt, even as a private partnership at KPMG, we should do. Because that diversity of thought is really important. And what better thing than to disclose it? Because once you've disclosed it, people work on it as part of their targets, as part of their attainment in terms of their performance every year, to measure it and then improve it. So I genuinely think shining a light on things, as we do with the financial markets with regulation, actually makes a big difference. Disclosure is the first step to actually an activity that improves the outcome. So I would actually encourage anybody who works in a business to do that, do the analysis, do the disclosure, and then actually set your targets and act on it, because it's the only way we're going to make a big difference over time.
John?
Yes, what I'd like to see is consumers to be able to access a greater range of products. And one of the things we've been doing, working with the Bank of England and the FCA in the Productive Finance Working Group, which I believe your CEO has been part of, is actually to look at how can we create new class of investments that actually prize long-term investment. But what we've got to do is we've got to get that regime right for wholesale investors first, and then we will move to retail investors. Because notwithstanding the comments which I completely concur with around risk, I've just taken a bill through Parliament to compensate people who invested in London Capital and Finance of £120 million, where they invested in what they thought was a high return investment, and it turned out to be not what it was billed as, and was a fraudulent product. And we have got to bring clarity to where those boundaries of responsibility lie in this country, because it's no good opening up to retail investors without clarity over what protections and responsibilities exist. The financial promotions regime is a key part of that as we look at how we interface with cryptocurrencies and who we enable to buy what. But it is an area that needs reform, and we need to reset people's expectations. I'd just like to build on what Kay has said with respect to the Women in Finance agenda, which sits under my responsibilities. We have a charter which basically has got about 400 financial services firms that have signed up to it, and they appoint an accountable executive on the board who and they set a target, and then they have to report on that target, and we have seen a meaningful amount of progress. But what I'm currently doing is actually going into deep dives with individual firms to say, what are you doing to move from a situation where you have 50-50 recruitment at graduate level or at intake level, but over the course of the next 20 years, by the time you get to the senior management and board appointments, you've certainly not got 50-50. So it will be about mentoring, it will be about sponsorship, it will be about actually saying, well, we need better interventions, bespoke interventions to help women along that career path and the challenges that exist there. Across financial services, there are good practices, but it's not universal good practice. And my job is to try and shine a light on that to get more progress in this area. But I would want to echo the comments made around the work to actually look at inclusion more broadly around the socioeconomic backgrounds of many people that go into financial services. It shouldn't be just open to people who had a certain sort of education at a certain small number of universities. And the fact that 2/3 of financial service and professional services jobs are outside of London and the South East gives us a great opportunity through free ports as well to actually find hospitable environments for parts of financial services to grow outside of London and the South East. With respect to the CDOTs, what's really important is that we continue to work on areas of transparency. The Crown dependencies and overseas territories have shown an openness and a willingness to do that. But I think in some of the news stories we've seen over the last 24 hours, there is quite a lot of clarification that's needed over where those transparencies need to improve. We were evaluated in December 2018 by their Financial Action Task Force as being one of the best ever in terms of financial services and the transparency that exists. But there are areas that we will always need to look at, and we will continue to do that, working with departments across Whitehall.
Just very briefly, and very much looking forward to visiting Hargreaves Lansdown in their home in Bristol. I think lots of comments already that I very much support, but I just say, I remember being told by an FCA official that if you were to take all of the rules that they deal with relevant to consumers, you would have, and printed them out, you would have a pile of papers 6'6" high. You know, and I don't think that's a good place to be. So I think that there's a lot that we can do over the longer term, not about reducing standards, but about simplifying standards and streamlining them. And I think that would be in the interests of consumers. I think it would be far more efficient, and it would be a far better way forward. On diversity of thought, Tony, completely take the points that you've raised. I think the industry needs to do more, but I would say that actually we have, in many ways, quite a good track record. If you look at the Social Mobility Foundation list of the 50 companies with the best record on social mobility, 27 of them are in this part of the economy from this industry, and we're only 10% of economic activity. So I think we should be proud of the stuff we've achieved. I totally agree with John. This is not just about diversity, having a more diverse group of people within our companies who went to fee-paying schools and Russell Group universities, and I think that's sometimes what has happened, which is why I absolutely endorse and salute the work that KPMG is doing about looking at socio-economic diversity. And in fact, in our submission to the FCA consultation on diversity and inclusion, we've made the point this is about also making sure you're looking at those sorts of areas of diversity, and the point about diversity of thought, because that's a better way of dealing with risk, having different forms of perspective around the table. On the overseas territories and the Crown dependencies, really pleased that you've raised that, because I think that's a really important point. I think CityUK was the first organisation to use the term the British family of financial centres. There is a symbiotic relationship between centres such as Jersey and Guernsey and the UK. And in fact, I had breakfast with my counterpart from Jersey Finance, Joe Boynahan, just last week, and there's a really strong relationship there. And I think we can learn a lot from how they've been really good at spotting niches, reacting to them quickly, responding to them quickly. Absolutely, we always need to make sure that there are extremely high standards that apply to an international financial centre like London, but I think there's a lot that we could do together.
Okay, show of hands. We'll have the lady in the second row and the gentleman there. So, one.
Rebecca Park, Global Counsel. I just wanted to go back to the comments about crypto assets and the crypto regime more generally. We have 10% nearly of people in the UK trying to use these for payments, for savings, for investment, betting, depending on how you view it. But we don't yet have a regulatory regime that is comprehensive and is little more than sort of tinkering around the edges of the perimeter or trying to bring it into the money laundering framework. The new task force is a great idea and a great proposal, but how do we stop the UK falling behind other jurisdictions who are clearly running this at pace?
And then the gentleman there. There.
Abhishek Sachdev, Chief Exec of Vedanta Hedging Limited, and also a Conservative Counsellor in Hertsmere. One of the very concerning things that Dr. Lyons pointed out was this funding gap that SMEs face. And I would sort of put it to you and sort of ask a question, perhaps of John Glenenby and Miles Celic, about what more you can do to try and help trust in financial services from SMEs. Because unfortunately we're still more than a decade from the financial crisis, and there's a litany of the kind of banking scandals which happened in the past, and let's kind of forget about those to an extent. But the Business Banking Resolution Service, which has been almost 3 years in the making, just honestly take it from me, it is shambolic at the moment. The Times did a great article on this a few months ago by James Hurley, highlighting some of the issues. There are lots and lots of problems with it, and please don't say, look, small business representatives are represented on there, so it's all okay, because I know all of them and they're not happy. So I know various different MPs are looking at this, people like Kevin Hollinrake, for example. But I guess a question for both, sort of finance and also John Glenn is, what more can you do to try and help trust in financial services from SMEs, such as making the Business Banking Resolution Service a genuine, fit-for-purpose resolution place for SMEs?
Thank you. We'll just go down the panel the other way, I think. So, Miles first.
Rebecca, thanks very much for the question on crypto. Absolutely agree. I mean, I think I would say there are all sorts of stats flying around about how many people are using crypto. I sometimes feel very left out with some of the broad numbers that are being used, but quite clearly, it is a growth area. It's something that the UK needs to ensure that it's got the right regulatory approach to. We issued a report on this a few weeks ago. I can see from your nod you may be familiar with it, and we think it's important that there is a regulatory regime that is properly tailored to this. There are clearly potential risks here, there are clearly potential problems, but I think that the huge opportunity here is something that we shouldn't lose sight of, and I think there's some real focus here within both the regulators and government on that. On the point about the funding gap, completely agree, and I think Gerard hit the point here. You know, the Macmillan Commission looked at this in the 1930s. We have not yet found a solution, and you know, we're sitting here, you know, in a country that has one of the world's two leading international financial centres, and there is a problem here. Now, I personally take the view that if there was an easy fix, you know, either in regulation or legislation or tax, over the course of a century, we probably would have found it. So the bad news is I don't think there is an easy fix. The good news is I think there is a fix, and I think that fix is around custom and practice. I think it's around culture. That is harder to change, but I think that is needed both in the financial services industry and in SMEs themselves, because I think there is an approach that sometimes people just go to family members for financing, or they just think of banks. You know, if you look at the US, there's a much different attitude to, say, equity financing than there is in the UK. Often small companies feel really uncomfortable about what they see as losing control, whereas in the US, the culture is that if you've got somebody to invest in your company in that way, that's a sign of success. You've made it, you've been successful. Interestingly, it's completely the opposite in Europe. It's a sort of 80-20 split one way in the US, it's 20-80 in Europe. In the UK, it's about 50-50. So I think there's more that we can do. We're doing a piece of work with the Federation of Small Businesses looking at precisely how we do that. I think it is going to take something that's going to take a lot of time. Very much salute the work that the Treasury, the Bank of England and the FCA are taking forward on productive finance, which I think will be will provide for some of the progress here. We're doing some work with BEIS on life sciences, particularly about how you scale up with life sciences and improve the funding flows there, and something we're doing with our colleagues in the Bioindustries Association. So I think government's alive to it, I think the regulators are alive to it, the central bank's alive to it, industry's very alive to it. I think this is going to be a slog, and I think it's going to take all of us to make effort on it.
Yes, to Rebecca's point, I don't accept that we're falling behind. What I accept is that this is a complex area to get right in a fast-moving area where other jurisdictions aren't clarifying things any faster than us. The bottom line, I was in the States the week before last, and there is significant uncertainty around exactly where to put the regulators' lines around central bank digital currencies. Do you have it? How do you regulate it? But also on crypto assets. There have been some things that the FCA have done with respect to banning crypto asset derivative sales to retail customers and putting warnings out there around, you've got to be aware that this isn't a one-way bet, although it's projected into advertising. How do we get the interaction of our financial promotions regime and cryptocurrencies right? That is not something we can take off a shelf. It needs quite a lot of work to calibrate appropriately. What I'm clear about, and back to my opening remarks, is that we need to enable innovation in financial services, but in a way that gives proportionate regulatory oversight. And that might sound like a load of waffle, but it is actually a well-calibrated set of interventions in a quite sophisticated industry that you need to get right, and that's why there are so many consultations and thought going into that. But I was encouraged by the conversations I had in Washington, in that actually, in terms of the work that the Bank of England is doing, Sir John Cunliffe in particular, in leading global thinking in these areas, is very much understood. In terms of the comments about the BBRS and its progress, that is an independent entity that isn't part of government. It was an industry solution to deal with the long tail of unresolved matters from the crisis, as well as to deal with disputes that happen with SMEs. Miles's encyclopedic knowledge of this subject was demonstrated there. I think what I would say is two things. Fintechs and the involvement of new suppliers, if you like, of finance for small businesses will help significantly. I think there's a challenge in terms of giving them proportionate regulation and capital requirements, though, to make sure that they can really compete with some of the bigger banks. The structure of banking in the United Kingdom is different, and my esteemed colleague Kevin Hollinrake will talk about what happens in other countries. We are not going to have 5,000 banks like the US have overnight. That's not going to happen. What we can do, though, is look at the dynamics of competition between fintechs and smaller banks, and we are looking at that. There's a group of 11 mid-tier banks that are looking now at what those capital requirements should be, and I'm very much involved in that conversation. But I would just comment in terms of what Gerald said about SMEs and access to finance. The last SME monitor of lending, I think last month, showed that 87% of businesses were able to access finance. So I don't think it's totally dire, but I do think there are significant challenges. It's about the expansion of supply and proportionate regulation for those new suppliers of finance. And also that will put pressure on the big banks to improve the interface that they have. But we also got to do it in the context of responsible lending, so we don't get into where we were in the run-up to 2008. We mustn't go back to that, even if we now need to recalibrate.
So in the Khalifa review, one of the key recommendations was that there needs to be a framework for crypto assets and for its regulation, and that it needs to have that urgently rather than let the industry now effectively just bobble on its own. So it has reached a stage of maturity that we certainly felt in the Khalifa recommendations we were ready to say it needs to have its framework. There are huge differences between the very large, very professionally organized crypto platforms to some of the smaller entities that you have no idea what their provenance is, where they may be headquartered, what they're doing. And the problem is, as a retail investor, you cannot differentiate between the two. A regulatory framework allows you to effectively have that differentiation done for you and allows them to have reached a certain standard and certain oversight. So you have, even if it isn't consumer protection, you feel that somebody has already scrutinized them such that you are actually taking a slightly less risky step in putting your money into that particular investment, bet, whatever you want to call it. But the reality is, I think the time is right. The regulators will have difficulty doing this, but Hong Kong have done it. Singapore have done it. There are regions around the world who are actually embracing this already. So I think we can learn from best experience elsewhere. And if the industry is calling for something, and there is a very big group of crypto firms who are now calling for this, it suggests to me the time is right to actually encapsulate that within a proper framework. So I will wholeheartedly endorse that, and it's one of the recommendations that we made. With regards to the SMEs, I think we have to differentiate, and in Brussels we spend a long time talking about SME funding and how you turn this 80-20 around the other way. The reality is that a very large number of those SMEs are micro businesses. They are very, very different, and their needs are very different. You would only ever want to give them some form of debt instrument rather than actually an equity instrument. But the medium-sized firms or a high-growth firm, very different beast in terms of funding. And that's the area I think we really need to focus on. We need to facilitate that funding flow really, really quickly. And again, coming back to Khalifa, even for the fintech sector, which is hot right now, there's lots of money flowing into it. There is still a funding gap when you actually get to a certain size. And so you need to find ways of bridging that. And it may be that, there needs to be a private government type partnership where you stimulate a fund for that type of investment. We've done it in life sciences, maybe we can do it for fintech. There are things we can still do, but the private sector also needs to be able to lean in. And we're seeing some interesting private equity platforms emerging now, where we're starting to see people say, rather than taking your company fully public, we can actually, for a share in your company on a temporary basis, give you the funds you require to grow. And then when you've reached your target, you can repay that money and actually take your equity back. There's going to be some interesting innovations, I think, over the next few years. But it all involves some form of give and take. And that equity culture is not one that sits terribly comfortably with traditional SMEs. But I think the high growth firms probably more minded to access some of this. And they were the first ones into crowdfunding. So there are lots of opportunities there, I think, for this to really, really take off. And innovation shouldn't be stifled, but it does need to at least have some oversight by the regulators to make sure that it's been done properly.
Okay, and Gerard.
Yeah, I won't answer the question on small firms because I covered it and I think all the points have been made. But if I could come to Rebecca's question on crypto assets, I think this is a really fascinating area because we are in the early stages of a digital and data revolution, which throws up all sorts of challenges in terms of data democracy, but phenomenal opportunities in terms of openness, transparency, costs being reduced. I would very much differentiate between crypto assets and the digital currency space. And as the minister's here, not just because he's here, I think he and from 2016 to 2019, quite a few big players in the city were on the back foot. There was a sort of period of benign neglect. Since 2019, what's actually happening at the government level has been phenomenal. And also City UK and the Corporation of London are in the room. Also the city big players have started to come together. And one area of success was the setting up of the task force to look at digital currencies this summer. This is a key area that we need to be on the front foot. The French in particular have been talking about this since 2019. I was at an event in Shanghai 2.5 years ago. It was in one of the small rooms at the Shanghai Import Expo. There was only 600 people in the room. But the politicians, the central bank and SAFE were all on the same stage. The Chinese are really at the front foot. So this is a global competitive area where we need to be very much doing more, not only for the wholesale market, as Kay's touched on, but one area is the whole area of financial inclusion. Once you get into digital currencies, then you can start to reduce the costs, the payment system. Here in the UK, the Passion Project is doing something with what they hope to be called BE Bank, to bring in a social bank in the UK, which I'm partially involved in at the moment. If that actually comes to fruition, you suddenly have the cost of access to finance and the information being available to lenders being as good as it can get. That suddenly allows financial inclusion to suddenly become an area you can address. But in terms of the city, the thing I would conclude with, we got Corporation of London, City UK. I come across many people in the city who are dealing this area who feel frustrated. They feel they don't have access to the ministers and others. My suggestion, I'd make one of the ones in that policy exchange paper, was that we should have a semi-formal quarterly meeting, ministers maybe, but semi-formal, where we start to bring in some of these other key players. The Aurora project, which involves traders and etc., are people at the front foot of this digital space. So I think we've done a lot. I don't think it's about crypto, but I do think the digital space is both relevant for the wholesale markets and competitiveness, and also is a big area in terms of the retail sector and financial inclusion. And I would congratulate the people in the room for already having done a lot in this area.
Okay, right, we're in our final 10 minutes, so this is going to have to be a bit of a quick fire round, so even more than normal, I stress, quick questions, please. We'll have the gentleman in the back row over there, and then the gentleman in the second row over there, please. Thank you.
Thank you. Nick Kelly, leader of Plymouth City Council and previous IFA. We're all here with financial services at our heart. What are you going to do, and what plans have you got to actually open up good financial advice to close the pensions gap, the savings gap and protection gap, not to the few, but to actually the majority of people that we represent, because there is a drain with regards to financial advice within this country, and the burden falls back on the state when people fall ill or die. Are there any incentives planned, such as in the past, life assurance premium relief or MIRAS, to really stimulate the average man and woman to embrace financial services and have a better, more secure future?
Okay. Sir.
Andrew Churchill, various hats. Khalifa obviously raised crypto as one area, also raised financial crime, but picking up on the crypto assets and some of the LSO scams. Do the panel believe that the online safety bill ought to include financial crime and scams? And given that the Minister's already raised that we had one of the cleanest bills ever from FATF, should this be something which the UK leads on globally?
Models of the form, thank you both. And we will go back the other way to conclude, I think. So, Gerard, please.
Yeah, well, on the last point from Andrew, I think a lot's been done in terms of financial crime, also cyber security. UK finance aren't represented in this room from the banking side. That's been one of their big areas of focus for the last couple of years. So Minister might come up with more detail, but I think a lot's been done and more needs to be done. Nick's question on good for advice. I'm going to plug Netwealth, actually, partly because they pay my salary. But this is a key area. This is why the whole consumer market is open ripe for disruption in some respects. It's about access. But there's a whole issue here. Basic numeracy skills are a key part. None of us can do anything about that directly, indirectly. But financial literacy has been an area talked about. Maybe it's formalising that. But also coming back to your question, I think part of MiFID was increased transparency. I think increased transparency, and therefore, as Kay touched on, once you start analysing the data, people sort of can hold you to account. How much people are charged for in terms of their fees, how much access, therefore, they get. But I think this is a whole broad area. But I think also reducing the cost of financial services and making it more acceptable to talk about financial services in a positive way, I think all helps. So I don't think there's any one answer. I think people have talked about all the answers over a period of time. It's effectively seeing them put into fruition. Thank you.
Okay. Quick fire, we've got 6
So I'm
minutes.
going to take up the IFA type environment where advice suddenly became really problematic. It was a UK issue. It was not a European issue. The UK did it to themselves. It was not done to them. MiFID II did the same thing in terms of taking the same problem where you had advice that was conflicted potentially with those who were selling the product. And therefore, they decided disclosure was the way to go about it. And you had to disclose that relationship if you had one. And you had to actually disclose your fees that you were paid as a result of that relationship. So 2 different systems are now overlaid on top of one another. So the UK now has both its own domestic system, which effectively bans the advice from those with vested interests, and we have the MiFID overlay on top of it. Time to simplify, surely. It really must be time to now look at why don't people now take financial advice when they're actually making their investments? It's because the pricing system now is actually quite difficult. So let's simplify it, let's look at it holistically for the UK market specifically and make it work. And I think we've had enough experience now to know what isn't working to actually try and put it right. With regards to all of these, absolutely it should be included in the bill. I mean, I can't see how it's not, given the number of financial scams that there are. It does seem that online marketing is a big issue. And it would be a missed opportunity not to include it. And with regards to cyber, we have some of the best cyber firms in the world, and we really ought to be making a lot out of this. And anything that we come out, in the leagues as being good at something, then of course we should use it for promotion. There are enough people out there pulling us down with all the other stats where we come top for all the wrong reasons. So let's make sure that we utilise every competitive advantage that we have.
John?
Yes, to Nick's point, it's the Money and Pension Service have produced the financial wellness, well-being strategy, which I think underpins a lot of the work that needs to happen. Look, what we did when we came into government, essentially 10, 11 years ago, was give people those freedoms. And with those freedoms comes a lot of choices. And then what we saw is that people weren't making investments when they had that money released at 55, what would soon be 57. What you've got to be able to do is find a way of getting advice that is proportionate to the scale of their investments. Now, there's been work done on default pathways, which will certainly help. So where people release that money and then the risk is they just leave it in a very low interest cash account when they should do a lot more if they're not going to use it for another 10 years. But I think Kay's the expert on this, and I think that there's work to be done in terms of how we can look at that in legislation. We will have this bill coming forward next year to move this agenda forward. But you are right that with that freedom has come a situation where people aren't often optimising the decisions around where to invest. On the issue of financial crime, the online safety bill, there is a legislative scrutiny process that Damien Collins and his committee is leading. I welcome that. We have got to accept we've seen an exponential growth in fraud online, and we've got to accept that we've got to meet that with measures that are effective. Now, the DCMS is doing work on online advertising, but I think there is concerns around how that will land and where that will get to. So this is a very live issue that we've got to get right. And I'm working very closely with the Home Office. I'm co-responsible with Damien Hines in the Home Office on Economic Crime Agenda. And we met last week because we recognise we've got a window of opportunity to define the way forward, and we'll be meeting very regularly as we go through this process. I can't give any undertakings today, as you would imagine.
And bring us home.
So just a couple of quick points. Andrew, thanks very much for that question. I think Gerard's absolutely right. UK Finance have been doing a huge amount of work on this. I'm on the board of UK Finance. It's been a big focus. One thing I would just point to is that it's also about making sure that these skills run throughout companies. So one of the things that we did some work on with Marsh a few years ago and identified was when it comes to cyber issues, often people at the later ends of their careers, typically the sort of people who appear on boards as non-execs, haven't had direct experience of cyber. So given the boards increasingly have that responsibility, you need to make sure that those skills don't just exist with people who are entering the workforce, who we kind of expect to be digital natives, but also people who are responsible for the governance and oversights of companies as well. So I think it's a cross-organisational, cross-policy challenge. Nick, I think it's absolutely the right question. It's something we do need to grapple with. If you look at the where we are as a society, we've got an ageing population. The worker dependency ratio is heading in the wrong direction in this country, better than many other European countries, but it's still going to be a challenge. So this is really fundamental. I think, as Kay and others have said, we've got to simplify this. We've got to look at costs. We've got to look at how we incentivise people to take this kind of advice. I think financial literacy and education is part of that. I do think we're also on the cusp, and we're beginning to see it already emerging, of some really interesting things that are going to become possible from a financial inclusion perspective through the use of technology. So robo-advisors and so on. And in some ways, the Americans are ahead of us on this, and there's a lot we could learn from there. But I think it has to be an integrated effort.
Thank you. Almost 10:30 on the dot. That's all the time we have today. Thank you for joining us this morning. Please join me in giving a hand to our panel. It's been a hugely enjoyable discussion. And I look forward to seeing some of you again at a future Conservative Home event. We're running a lot of them. So see you soon. Thank you. Thank you so much.